This is Business Incorporated, live on Channels Television from Lagos. I am Bolaji Akinwale. Coming up, the Securities and Exchange Commission holds its last Capital Market Committee meeting for 2016. Developments ahead of OPEC meeting on the commodities market update. Plus, South Africa's Treasury proposes a new national minimum wage. Let's get started with the final meeting of the Capital Market Committee, which is holding currently in Lagos. The CMC is a body established to serve as a medium for exchange of ideas among market stakeholders, as well as for feedback to the Commission and how to continuously improve the market activities and regulation. Today's meeting will focus on reports from some committees which will be revealed during the meeting. These are the Law Review Committee, Listen and Shared Services, and Financial Services Committee. The meeting will also provide a platform for the launch of the Nigerian Journal of Securities Markets published by the SEC. The Deputy Director and Head of Department Securities Issuance at the SEC, Mr. Abdulkadir Abbas, will be joining us later on the program. And now to the market, starting from Asia, where the stocks were slightly higher in morning trade as investors focused on new economic data from Germany and increased expectations of a U.S. rate hike next month. DWTV financial correspondent Ulrich Bach joins us from the Frankfurt Stock Exchange. Ulrich, it's good to have you on the program. Now, new manufacturing orders and consumer sentiment increased in the United States in the month of October, and analysts believe this may raise the possibility of a U.S. Fed rate hike. What are the sentiments in the markets?
Yes, that's the sentiment exactly, that a rate hike in December seems very likely. Indeed, a poll conducted in the United States among market participants yields a quotient of 100% of the people polled say that a rate hike is imminent in December, that the Fed won't hold back anymore. The people I talked to here in Frankfurt, for the most part, also consider a rate hike in December very likely. Some say it's not yet time because of the uncertainties involved with a Trump presidency. The Fed would have to hold off. But, you know, there are already movements in the markets where you see interest rates going up because of the expected consequences of the new president's economic policies. You see the bond yields for treasuries, for example, shooting up, and the Fed is also having that in its eye. If President Donald Trump, as of January, starts spending, if the economy jump-starts, then interest rates will rise also, and the Fed will probably want to react before the fact, prophylactically.
Now talk to us, Ulrich, about the German IFO Institute's latest business climate analysis. The European Central Bank is also publishing its financial stability review.
Yes, that's right. The Financial Stability Review of the European Central Bank yielded, well, a worrisome-sounding analysis. It says that the risks to financial stability are increasing once more. They're pointing to banks being at risk because of not least mountains of bad debt, and they're very uncertain of how a bank's profitability can be improved. Banks' profitability is not high enough. Then the ECB also sees the risk of correction in the global markets. We're seeing that already on the bond side with the treasuries in the United States, for example, but also here in Europe, yields also jumped with Trump's victory there in the United States. And the ECB also cites political uncertainty connected with the policies of the incoming United States president. Totally different picture when you look at the IFO. We in Germany here say IFO, Institute Business Climate. That stayed flat this month, but that's good news because people expected it to drop with the election result, that surprising election result in the United States. Before that came in, people thought, well, bad for the market, bad for business. But now a lot of people are expecting better business in the United States, and that should spill over to Germany. That seems to be basically the gist of what IFO says. Interestingly enough, people looking ahead and that component of the business climate are becoming a little less confident than they were before.
The oil prices were flat this morning, with investors uncertain over whether OPEC and non-OPEC giants like Russia will agree on the production cuts when they meet next week. Is this weighing on the market as well?
No, not right now. Not here in Europe. Not in Germany. The oil prices jumped up nicely about 10 days ago. They climbed up, and now they're basically sticking to that level. So no alarm bells going off here at the moment because of that.
Thank you so much, Ulrich Bat, DWTV financial correspondent reporting out of Frankfurt. And out to Asia, where Japanese shares led gains in a mostly flat to lower trading session on Thursday, as a weaker yen gave a boost to shares in export-oriented firms in catch-up trade. The benchmark Nikkei 225 finished up 0.94%. The weak yen pushed exporter stocks in Japan higher, with Toyota, Nissan and Honda gaining. In South Korea, the Kospi slipped 0.84%, while Hong Kong's Hang Seng Index was down 0.3%. Chinese mainland shares traded mostly lower, with the Shanghai Composite closing near flat at 3,241.48 and the Shenzhen Composite down 0.38%. In Australia, the ASX 200 wavered between gains and losses throughout the session, but closed near flat at 5,484.07 points. Now let's take you to the commodities market. It's less than a week to the planned OPEC meeting, and top on the agenda is whether the cartel and non-OPEC members will agree to an output cut. Amaka Jegbo is a research analyst with a financial derivatives company, and she joins us from Lagos. Amaka, thank you so much for coming on the show.
Thank you for having me.
Now, oil prices have been trading sideways in the last couple of days. What is